Welcome back to International Finance. I am Andy Kim. Today we are going to finish Chapter 11, International Banking and Money Market. I think last week I goofed up a little bit when I was talking about euro currency and how it got developed and LIBOR kind of things. But that deserves a special attention, and it involves a lot of interesting stories about the banking family. Here I focus on one very important family called the Warburg. You see this book by Neil Ferguson, High Financier, The Lives and the Time of Zygmunt Warburg. Zygmunt Warburg is the guy over here, German Jewish banker, who used to work in London after Second World War. Okay, how did they revive their banking family as well as the city of London as the global financial hub, right? You go ahead and watch this YouTube video in your free time. And Neil Ferguson delivers a nice speech about the banker's family over here, how he brought this competence back to banking industry and the livelihood. And then more strict and then strong ethical standard in professionalism in London banking industry. Okay, so that was a good lesson for after especially recent global financial crisis, right? Where's the ethics of the bankers and where should we go? And then that kind of social responsibility or whatever, bankers ethics, all these kind of things, he wonderfully discusses it. So go ahead and watch it in your free time. But the thing is, it is deeply related to the birth of Eurodollar market, and especially in London. You see this book, then you will see that in chapter 11, London is a center place for euro currency and euro bond market. And if you will look at also in chapter 12 as well. Now, after World War II, you remember in world history, Marshall Plan was there, right? The United States was the only superpower in the whole world. Of course, there was a Soviet Union, but in terms of economic power, it was the United States, right? And then how about continental Europe and then Britain? They were totally devastated, right? Ashes. Of course, there were a lot more ashes, like complete ashes called Korea. After Korean War and then after Second World War, right? Of course, even before that, right? Because all those, bombarding happened in Korean Peninsula. Nothing was there, and Japan as well a little bit, but not as much as Korea. But Europe was relatively, better situation than Korea, but compared to America, it was completely destroyed. So what did they do? The United States, those policymakers said that, we don't want Germany or Japan falling into a Soviet Union or the communist influences. So, if we try to punish these war criminals too much, and just like what we did in First World War, there will be another Hitler, and then or Hitler or Dozo Hideki. How do you say? I don't know, like Japanese empire building up again, and then fighting against U.S. in the future, which would be horrible, right? They don't want to imagine that, because this time they will have to imagine the situation where these two empires joining the force with communist world. So in order to prevent that kind of situation, we have to rebuild their economy and incorporate these guys into the capitalist world, Western European world, right? So that was a basic grand plan of Marshall Plan, right? And then together with it, the containment strategy against the Soviet Union by George Kennan or something, right? And then so it involved expansionary policy, fiscal policy of the United States, which means that you have to, the United States were, very much widely importing so many German products and Japanese products as well, and together with European products like French ones and the British ones into their domestic market, which means import expanded, export not as much, which means balance of payment deficits was happening in the United States at a huge scale. what does that mean to German exporters? Well, they got flooded with US dollars. Volkswagen, they were able to sell like crazy into the United States. Now you're sitting up on a pile of US dollars, right? What would you do? Or you, and French exporters as well. You sold so many, I don't know, Citroën and then Peugeot, all these kind of things, and then you're sitting on the pile of US dollars. What would you do? You could put your US dollar in US banks like Bank of America or Citibank over there, but there could be some cost associated with it. The cost is that US banks, they're under heavy regulations by the Federal Reserve of the United States. For example, Regulation D is there, so that a higher amount of reserve requirements is there for this US dollars, so that, you know, they will, in the end, that kind of requirement will end up being the higher charges onto your deposit or lower interest rate for your deposit, right? And then Regulation Q, restricted interest payments to 1% for 30-day deposit and etc. like that. Lower interest rate, less attractive for you to keep your money in the US banks. And then for US banks, there is the FDIC, Federal Deposit Insurance Corporation of the United States, which is 예금보험공사 in Korean terminology, to prevent any kind of bank runs in the United States financial system. All these kind of things involve higher fees if you keep your US dollar in the US banks. So instead, why not we just keep it in a non-US bank somehow, if we could? That's their idea. Okay, there was a demand going on. If we could keep this US dollar outside the US bank somehow, right? Not under the US regulation, right? Not precisely outside the US banking system itself per se. It's not totally outside of it. The reason I say not totally outside of it, you can check out what that means in the appendix of this chapter 11. Go ahead and do your numbers over there, and you will realize that it is still inside the banking system over there, but it's not under the regulation of the US authorities, right? Supervisors, right? That was the idea. One part going on, okay? One demand increasing in that part. Another demand increased, okay? For euro currency kind of things came from the communist world, the Soviet Union, and then the East Germany, and then Hungary, Poland, all this kind of Romania, you name it. Those Eastern blocs of communist world, right? Had some influence over there. What do you mean? Right now, you don't feel it, right? The Eastern Europe, in your millennial Generation Z, right? Gen Z guys, I guess you don't have any idea about, you know, what the communist influence is like, was like in 1950s or 60s or 70s, but it was clearly, you know, big threat. And then the geopolitical tension between these Eastern blocks and the Western blocks was like super duper crazy, right? And then these guys, right, Eastern blocks, they also had a large amount of US dollars on their own by, you know, for whatever reason it may have been, right? They may have sold some products or services, or they happened to sit on some kind of US dollar amount on their bank account. Now, what do you do with these US dollars, right? Would you keep it in the US bank's deposit account? Your enemy state, right? No. Why? Why no? Think about Iran, what's going on right now, or North Korea, which is enemy state of or axis of evil of the United States, right? So the Iranian or North Korean US dollars, right? They keep it in the US banks or whatever, is frozen, basically. Not just US banks, but US allied countries' accounts, right? It's frozen, right? So frozen means you cannot do anything with your own money. Okay, it's the government takes it over and then holds it. Okay, so that you cannot retrieve it. Okay, essentially you will be in trouble. So these guys, right, try to make an account that is outside the domicile of the United States government, right? Outside the influence of United States. So they had a Soviet Union controlled French bank called Banque Commerciale pour l'Europe, I don't know, du Nord, right? So North Bank of, commercial bank, essentially in Paris. So it's not U.S. bank, right? So they could just freely use it. And the interesting thing is their telex address in this bank was Eurobank, right? And that gives a nomenclature, the origin of this name of euro currency, they say it. Now that was the second part of the demand, higher demand for euro market. Euro, not the euro currency per se, but the euro dollar kind of things, euro currency market, okay? In 1950s and 60s. And in addition, if you read this book, right, you will see that there was some British government's effort as well. After Second World War, during the Second World War, Hitler bombarded London like crazy, so that everything was devastated. Now, how can you rebuild this city of London as a global financial hub, right? Before Second World War, it was the most important financial hub in the world. But after Second World War, it was Wall Street, New York City, right? But British, they tried to revive it somehow as London as a global capital market. And then British effort was also partly there because the European integration was going on. You remember that European integration after Second World War. I told you the conflict between the, quarreling or fighting going on, long time enemies between the French and Germany, like cats and dogs, right? And then to prevent any future conflicts, ECSC was created, right? Coal and Steel Community of Europe. There are Alsace and Lorraine and all these kind of resources. Let's just share it somehow, and then economically, let's just cooperate instead of fighting and competing too much, right? Those kind of effort was going on, and the French and Germany were the central power in this European integration. In that sense, Britain was rather isolated outside of this, seashore line somehow, geographically. So how can they get integrated into this one was a big question. And there was a significant influence coming from this bankers as well. One important banker group is, Sigmund Warburg. He is from a very influential German Jewish banking family. Warburg is the name of German area, I think. And then history goes back to like 400 years or something, 400 years ago. Okay, Mittelweg Germanische, and then they are big banking family. And then how much was this family influential in global finance? Well, if you look at this guy named Paul Warburg, Paul Warburg, he had a significant input on the setting up the FRB system, Federal Reserve Board in the United States. What? You may say it. This is the United States and this is German guy. And how could he play some influence on that, right? Well, he observed what was going on in the when the German Empire was built in 1871, and then how the Bundesbank, the central bank, right? Bundesbank was being created, and then that Bundesbank establishment gives some great ideas about what should be done for the United States central banking system. So he brought this kind of idea to the United States and advised these bankers in the United States later on in 1913 or something. Okay. That's Paul Warburg. Yeah. And then here's Max Warburg, who was the owner of this Warburg investment merchant bank, right, in Europe, right, in Europe. And then those guys are uncles, if I remember correctly, of this guy Sigmund Warburg, right? Sigmund Warburg, or Warburg, if you say it, right? And then he, their family were victimized during the Holocaust in the Second World War, right? So he had to. He fled to London, the city of London, during the Holocaust period. And then after Second World War, he tried to re-establish the Warburg family in London, okay, their banking dynasty back again, okay, reviving it. And then one of the important ways of doing it, right, was setting up new kinds of transactions, and there's new kinds of financial facilities, services. But at the same time, this banking family, right, they had a intention to create an integrated Europe, right, to facilitate European integration. Why? Because fighting like crazy in Second World War or First World War never helped their family, like Jewish banking family. These two wars were so much devastating because Jewish banking family guys were international businessmen, right? And this will happen to you too. If you become successful as an international businessman, maybe you will be living in some other countries, right? And your family members will be, spread out in that countries. And then your relatives back in your home countries are still there. And if these two countries fight, and you're in trouble, because these two countries will suspect that you yourself must be the spy, because you have important information, and then you can speak both languages, and your relatives are living in each other's country. Maybe you guys are exchanging very important information, high level information. So we're gonna kill you. That kind of things happen, and that never helps this kind of families. So for them, their best interest was to create help this European integration. No war, please. That was their their intention, right? And then how can they help this integration from financial perspective was their very important purpose. And then this guy worked in London, as I said. So that was one important motivation. If you read Neil Ferguson's book, you will find it. I uploaded that chapter for you so that you will be able to learn. If you're in your free time, go ahead and read it. And then another important thing is, well, those financial integration of Europe can happen in any financial cities of Europe, continental Europe. For example, Brussels, right? Paris, or Berlin, or Frankfurt, right? There could be some good candidate cities in Europe, all inside that continent, or Roma, Napoli, right? Whatever. But why London, right? You may question. Well, these guys, right? Ferguson's report that in this book, that these guys found out that those alternative cities in continental Europe, they were full of bureaucracy, okay, and socialist movement going on over there. And then, there was so much bureaucracy going on. And then each different countries had their own political interests, so that they could not cooperate with each other well. So much inefficiency from the perspective of bankers, right? The bankers world, you have to be efficient enough, and then just competent, and then fast in processing those information, and then creating new financial services for the new clients like that. So you want to search for a best efficient location in terms of information processing. Okay, has a lot of implication for financial technologies as well, because it's all about information processing. So they said, this guy said, let's go to London. This is the best place in this situation after Second World War. And then by that, the London flourished, okay, as a capital market for the reviving the whole, how do you say, the integrating the Europe in terms of financially. So that was a very important development together with it. Okay, so I hope this brought some important information about ideas about the euro currency creation. Okay, if you look at the banking industry, okay, from purely money side, it's boring. But if you combine it together with historical development, it gets really interesting. And all those geopolitical tension or wars and all these kind of things, who fights against whom, what country fights against which country, ends up being, a part of the important story is like, who is the banker backing up those countries, and then after the wars, how do they develop their economy back again? And then it boils down to the question of who are the bankers working behind the scenes, right? And all these kind of things are very, very important, interesting and important things. And I want to draw attention about this one. Anyway, so thanks for watching it. So I'm going to talk about the euro currency a bit further in the next set of videos. Thank you.